Hey guys, what is happening and welcome to tonight's live stream. So I'm honored to have Revert2Means with me again. I've linked his channel in the description there, so check out his channel. He's got some great videos, especially some of his new ones where he's actually gone to different real estate developments. I think they're really good videos to check out. So we're going to be talking about real estate psychology, everything that's going on in the current environment and situation that we have at hand right now. So I'm just going to bring Revert2Means into the stream here. So, hey man, how's it going?
Hey Luke, how are you? Hope everybody's doing well out there, and appreciate you having me on again. It's great to be here.
Yeah, no problem, man. It's great to have you on to talk again. I feel like in this space, it's hard to find people who actually have that kind of straight edge mind like yourself. So it's great to have you here. Um,
Absolutely.
so yeah, like you've been walking around in a lot of your videos. I really like that. And you've been to like that development that you went to, wherever it was. So I just wanted to like, how much were the houses going for in that area?
You know, it's funny. I just got another automated email that I talked about in my video the other day. I got one this morning, and some of them are still going for right at 700, the bigger ones,
Yeah.
but the majority I've seen are 645 ish. 640. Um, and yeah, when I did that video, I just kind of wanted to 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 bring about the information to people because I've been seeing it since that development went up. Um,
Hmm.
and now recently, these last 3 to 6 months or so, the prices, I get these automated emails and the prices are lower and lower. And then today I get the one, 710 for the biggest model in that track. And I'm thinking, well, what if you bought a year and a half ago when they first got completed for $810,000?
Yeah.
Something to think about. I think it's going to be more widespread. There's an old saying, and it's not to brag about California at all. As California goes, so goes the rest of the country, in the states here at least. So yeah, there's a lot of things people need to. I would hope just open their eyes and start connecting the dots. Is all.
Well, yeah, and like psychologically to lose, like if you imagine you put 20% down and then you watch that vanish within like a couple of years, that's got to be like pretty hard to stomach. And I've seen a lot of people on different groups that I'm part of on Facebook and stuff, these real estate groups, and people have posted on there like people are trying to get out and walk away from real estate deals because the prices are falling since their closing dates coming. And over that time period of like 4 to 5 weeks, the market has flipped. And now everyone's like, yeah, I'm done. I want to try and get out if I can.
Yeah.
But it's hilarious because everybody in the real estate industry was saying this is never going to happen. Like this is just, you meet Kevin's, that other guy who's constantly coming up on my YouTube in California. I forgot his name. I can't remember his name, but all those guys have been peddling for the past year now that nothing's going to happen, guys. Supply, supply, supply. Um, but we're going to talk about market psychology and obviously everything like that. And I mean, it goes to a T the same in the stock market. Like in the stock market, as you get to the top of the price of what people are willing to pay for a different stock, the volumes go down and there's less sellers because people are holding on because prices have been rising, and the psychology is, oh, my portfolio is going up, so why am I going to sell? But then as soon as that stock goes down 10%, suddenly all those sellers, they arrive, don't they? It's just like magic. So yeah, I guess we'll see. Like real estate is more of a slow moving ship in some ways, but It's not as fast as like a stock or anything like that, but it's definitely starting to turn. I think we can all feel that.
You know, and I think you brought up a great point right there. People, the majority of people out there just think, oh, well, how come it hasn't crashed yet? And I, I mentioned that in my that video with the development. It's like, people, it doesn't, real estate does not happen. I even think I said it in my video. Real estate's just this gigantic, slow rolling snowball, if you will. You know, takes time. So people need to understand that it takes time, and it doesn't happen, unlike certain other things. Like, now we're seeing the Nasdaq getting into bear market territory and everything else. And yeah.
Yeah. Oh, yeah. People are getting wiped out on that. I've got a position on right now on the Nasdaq, so I've been keeping my eye on it. But it's been so up and down recently. Like today, it was up something near 3%, I think, and then after hours now, it's down like 400 points. Like it's nearly erased completely its entire day. So if you were buying that, thinking, oh, it's the bottom's in, well, the bottom, they keep saying the bottom's in and it keeps falling out.
I just read speaking of the Nasdaq, I just saw a fellow YouTuber. He was talking about Kathy Wood, ARK Investments, and some of her ETFs are they're down 90% on average, like 70%. Imagine that. And a lot of that, he just kind of joked. He said, where's all these Kathy Wood investors? Where are you, Netflix? Are you going to buy Netflix again? I think a lot of that Kathy Wood stuff was kind of tied into that, the meme stock stuff, AMC and all of that craziness. So.
Well, yeah. And I think a lot of it comes down to people don't know how to accurately value anything anymore, whether it's a stock, a house. They just like, you gotta think fundamentally. That's how I think, and I know that's probably how you think too, Jared. Like when I look at something, if something is overvalued by 5 times or whatever, I don't care. I ain't buying it. I'm not interested. I'm happy to be out of that picture. Like but some people are like, I gotta get in. Like it's gonna go up another 5 times, and it's like, yeah, but the fundamentals aren't there. Like it's all probabilities at the end of the day. Like you can't argue against the probabilities, and at some point we would do a big correction, and that's going to hit. And I think it's going to be like the tech bubble, where you saw all these stocks go down and they never came back. People were holding the bag for decades and decades and decades. But
absolutely agreed. And that same philosophy, whether it's stocks or real estate, it's the last 2 years we've seen the epitome of FOMO. Just people don't think long term. They think, oh well, my friend did this, and then it's all entailed in psychology. People get jealous. They get jealous, fearful. So many factors tied in that reality gets set aside, and it's just it's live now in the moment. Bob and Joe got a house, or Jill and Bob got a house, so we should too, and without thinking ahead. And that's going to lead to a lot, sadly, I don't wish bad on anybody, but sadly that's the reality of economics.
The herd doesn't usually make out very well. Like it's kind of unbelievable that people are always like, oh yeah, I'm gonna go with the herd. Like that feels right, and it does. Like our human psychology actually is always leaning towards that. We are meant to live in communities, so we do actually fall under the influence of different people. So if all our friends and family are buying houses, you better believe that's going to influence us. And if you're not thinking about it, and I like Tony Robbins uses this, but calls it the Niagara effect or something like that, where a lot of people, they're just in a river going downstream, like they're not really living life. It's just more like they're just being took by the river and the current. And yeah, it's gonna be really, really interesting. So, oh, Cowson's in the house. We've got a super chat here. He says, "Showing love, like the video." Thanks a lot, Cowson, for that super chat, buddy. Another great supporter of the channel, and I see a supporter of your channel now as well. That's great.
What's up, Cowson? Thanks for watching, bud.
Yeah, we got a lot of people in here, a lot of good minds. Yeah, so I really think, like, at the end of the day, people at some point, like, the sentiment is shifting now, but at some point we're going to see that sentiment shift to fear and panic, and that's really when the tide is going to turn completely of all the markets, I think, at that point. But what do you think, Jared, about, like, you know, one thing I wanted to talk about with you was, so, like, because we had this GDP print today, which was negative in the US. So, like, the yield curve's inverted. It looks really likely that it's going to be a recession coming. And I just wondered, like, what's your thoughts? Because if they do go back on rates, like, we're going to see a hell more inflation hit the fan. And people aren't going to be able to, like, people can't even handle the inflation we got right now. So I'm just wondering, like, the system is so broken, I just don't see a solution. I'm wondering if you see one or you think differently, or.
You know, and for people, first of all, Luke and I, we don't give financial advice. These are just our opinions and observations. What I think history is going to repeat itself again. I think next week the Fed here is going to raise rates half a basis point, but I think the market's already priced that in. And I think if the Fed, I'm a big believer in history. You know, it rhymes and it repeats. I think the Fed's going to raise the rates. I don't know. They're gonna have to stop because things are going to get worse. Just like you said, inflation's going to get worse. Things are so bad. You know, not only in Canada, in the States, it's global. It's not going to be pretty. And I, you know, you could talk to anybody who's known me a long time. I'm the most optimistic guy, but there's times you have to be realistic, and people are just not prepared. And, you know, it's going to be ugly for a lot of people. Sadly.
Wow. It's like survival of the fittest, you know. If you haven't, like, it's really going to be the strongest household balance sheets that are going to survive. Like, I just think it's a ticking time bomb. The way I think about it is, week by week, month by month, the household balance sheet is shrinking for everybody because of inflation, regardless of what these, you know, regardless of what the made up CPI is. You and me know that it's like 20%. So, I mean, if you imagine, like, something like 50% of Americans are living paycheck to paycheck, and I'm sure that's similar in Canada, like, you can't afford that. So you're going into credit, but then how far does that credit go? And it's just like, eventually people are going to start getting margin calls on their credit because they've expanded the credit so much, and now they're at the end. And I think nobody knows when that's going to be, but that's like it's a sad moment, but it's in the future somewhere ahead of us, unfortunately.
Yeah, agreed. I just saw a statistic right before coming on. MasterCard saw their usage rate among cardholders increase. I think year over year, like 23% or something. So
Wow.
that, once again, connect the dots. Consumers using credit, no more stimulus, and it's I would say it's a repeat of 06, 07, 08, but it's going to be worse, just my opinion.
Oh yeah, I think you're right there, because there was never this high core inflation. And when I say core, I don't mean the government's stupid core, which excludes everything which is core, but the actual core, like food, energy. Like, I mean, energy was obviously hot in 2008, but you didn't have food prices up like 10%. And it's not just that. Like, when you really think about it, folks, you really have to think, like, all these stories that you keep hearing of, like India now, massive drought, Indonesia is now cutting off palm oil supply. Like, these are all future inflationary pressures for food. Like, you don't have to be anybody smart to work that out. You just have to think, oh, well, if that's happening, that's going to translate at some point in the future into my costs. So that ain't going away. It's like it's continuing. And the thing I think is, when you look back at history at what these central bankers have done when inflation is hot, their only solution to that has been to raise rates. That's it. Like, they just have raising rates, and that's really it. And I think it's going to be so interesting over the next couple of months with the Fed, whether they hold true and continue to say, because the Bank of England has even said now, like, I'm sorry. He said like the guy who heads the Bank of England addressed all the households in England, and he said, I'm sorry, but we got to increase interest rates because of inflation. Like that's their only solution for that. And it's one that's not going to work, because most of the inflation is coming from outside of the economy, until we got like a really decent interest rate, which I doubt we'll ever get to. Maybe in some countries, not in the US. I don't think we'll ever get like above 2%. But, you know, New Zealand has gone incredibly strict with interest rates, and they're tightening up like credit and lending. There's a lot of people from New Zealand who follow my channel, and you know, their housing market's going down like a lead balloon right now. So it's yeah, it's kind of an interesting one. And the one thing I've heard so many times over the past year, and I was banging my head against the wall, and you probably as well, is real estate rises with inflation. I've heard that so many times, and I've just felt like, it boils my blood, because I'm like, real estate rises with the amount of credit that's available. That's it. There's no, and then if you really go further than that, then it's like, okay, wages affect the amount of credit that you can get. But it's really not. Like, people think in this old economics sort of like it's scary, Jared. You know, I was going through the bank's balance sheets, and even I was shocked. Like, and I want to go through the US banks as well. I'm going to do that, and I've done a video for the Canadian ones. But I was looking at that, like 80-90% of their business is mortgages. Like, it's all mortgages. That it's not interest rates for loans. It's all securitizing and selling mortgages. If we can get one mortgage that's $1,000, and we can create that into $20,000 worth of products that we can sell to the average schmuck who's going to buy it, and that's, you know, and it's the same recipe as 2008.
Absolutely. You know, I was digging around. I'm glad you brought that up. I was digging around last night on Freddie and Fannie's websites and a couple others, looking at mortgage-backed security purchases. And if you dig enough, you can find it. I'm sure you may have. I was surprised. A lot you got to dig really deep.
Yeah.
But a lot of their MBS is their mortgage-backed securities in the last year. Their FICO credit scores were 650, or most of them were about 600 average.
Hmm.
So I just want to bring that up to everybody. Everybody watching, does that remind you of anything? And, and,
Yeah.
and yeah, I mean, some people are comparing it to '08 and saying it's even worse. So I don't know if necessarily that's the case, but I know we brought it up last live stream about a month ago. I just heard it today. I'm driving around working out in my pickup truck. All these radio ads out of Los Angeles for mortgages. Get this rate now, and they were all adjustable rate mortgages.
Yeah. But when that starts to happen, and the thing is, Canada really hasn't suffered from the adjustable rate mortgage thing, but it's going to big time this time, because that was the only thing that people could get their hands on, which was a low rate. So they just piled, like, since last year, the middle of last year, people have just piled into those variables. And I saw the same. The growth in the US has gone up massively. In February, it was up something like 50% for ARMs. So yeah, it's not good. People are exposing themselves completely.
Well, if that doesn't show anybody that the real estate cycle is on its last hurrah, so to say, when when mortgage, so we talked about this offline, mortgage lenders are laying off people, Wells Fargo, Rocket Mortgage, Better Mortgage, and a couple others. But you hear that, and then you hear a radio ad or a TV ad or a YouTube ad, whatever. Hey, we still have this I love how mortgage lenders call it products. It's you can make anything another product. I'm curious to see, like last cycle, if we're going to have the negative amortization loans, because the very last cycle in '05 that I was in San Diego, '05, or no, it was '06, '07, leading into '08. People were getting these negative neg am loans, and they you want to like grab these people, like, do you know any fundamentals of finance and economics? You're going backwards on your loan in a down market.
Yeah, no. I haven't heard of that before. So what's a negative amortization loan? Like, how in the hell does that work?
Well, it just goes to show you, they're these lenders are on their last legs. So a typical 30-year, fixed rate mortgage, it's amortized over 30 years. So you're paying principal and interest, and you're paying that off each month over 30
Mhm.
years. Well, they would do 30-year neg am loans. It was almost, here's an example. It was almost like a reverse mortgage.
Oh, okay.
Yeah, when elderly people retire and their house is paid off, they can take these reverse mortgages, which, I'm no financial professional, but if you're, 80 years old, there's a small market for that where it does make sense, very small.
Hmm.
However, basically, a neg am was a reverse mortgage, but for younger younger people, and
Right.
that's all it was. It was a marketing term, in my opinion.
Oh.
So you take on a 30-year neg am with 4%, 5% back then, and you're not paying principal. You're basically not even paying interest only, because that was a product too. And there's in parts of Southern California, interest only mortgages um, for very expensive homes. Don't get
Mhm.
me wrong, I'm not a complete fan of, but if you're a very high net worth individual and you're buying, a $10 million, $20 million home, a lot of those loans are interest only. because that makes sense for the individual. You know,
Yeah.
they're not gonna lose their behind like the average everyday consumer that we're talking about. So,
Yeah. Yeah.
but people would have no clue. They don't read the 100-page contract. They're just stoked and happy to get in that house. It
Yeah.
goes back to FOMO and psychology.
Yeah. They're just so happy that they got approved. I can't remember. It was a broker, I think, that told me, or either I read it or it was a mortgage broker who actually told me. He said that a lot of people, they've already offered, because I think it was when they gave me an offer or a rate or something. This was a couple of years ago, and I was like, wow, that's not that great. And he was kind of like, wow, most people are just happy that they get approved. Like they've already put in an offer on a place. And I'm like, well, yeah, of course they are, because they just put in an offer on a place and now they're scrambling around to try and get financing. And I'm like, this are people like that unorganized that they would, and psychologically you're setting yourself up for failure doing that, because you're gonna rush, and like you say, you're just gonna sign where you gotta sign. You're not gonna check everything. Like, I mean, these contracts, some of these contracts, especially like home equity lines of credit and stuff like that, I mean, they have the right to call that at any time. They can call it, most of them at a minimum, if your house goes down in value, which they could say is at any time, they can call it in as well. They can say, hey, your house has gone down in value. You don't just have to pay us the difference. We want the whole thing back because we're having liquidity issues. And then the person goes, I haven't got it. And they go, okay, well, we're taking your house then, because it's worth more than what? Because they don't realize these banks literally don't give a toss about the consumer. They are ruthless in situations where, I mean, I see it trading every single day, and so does Trader 586, I'm sure, in the chat as well. The way these banks operate is by taking money from retail investors. It's by playing them around the charts, and it's patterns. You see the same patterns every day, because retail investors are the same. They're always trying to get a reversal and everything like that, and buy the dip and those type of things. They are just very predictable, and the banks know that they're very predictable, so they capitalize on that by just, because they know where they're going to put their stop, they know where their take profit's going to be, so they just walk all over them. And they will do the same if they get into issues, which they likely are going to get into issues, because the amount of loans that they have sold over the past 2 years is just mind-boggling.
No, that's a great point you bring up. People, I think, get so caught up in the emotion of a real estate purchase, you know, for their primary residence. They get so overcome with that, and then let's just say a year down the road, all these things happen, job loss, whatever, personal things, yada yada, and they think, oh, the bank won't do anything. You know, I'm a month behind. I'm 2 months behind. No, it's fine. No, folks, these banks, they're businesses. They're
Mhm.
You hit the nail on the head, Luke. They're ruthless. They want, it's all about money for them. It makes sense. You know, as a small business person myself, it befuddles me when I think people think, oh, you know, everything's fine. That's just been the whole euphoric thing these last 2 years with real estate, stocks, on and on. And they think nothing will happen until they get, you know, a notice of default in the mail. And yep,
And then it's all flipped.
yep. You know, I saw a comment a while ago. I wanted to the I saw an economist today. It was on CNBC, talking about the GDP release here in the states today. What was it? Negative 1.4.
Yeah, 1.4, Trader 586, 1.4.
1.4 negative. Yeah, I saw about midday today. I didn't even click on it. I just saw the headline on CNBC, and it was some I don't know if if they were with CNBC or some analyst, and they said nothing to worry about, no biggie.
Oh yeah, just just keep looking over here whilst there's a house on fire over the other side.
Exactly.
Yeah, it's kind of like there's not any other indicators other than the GDP, like the yield curve. The bond market's been collapsing now for 2 months, and now the stock market's collapsing. Like, people just look at what they want to justify, I think, their terrible decisions in life, and it's been a sad reality actually waking up to that over the past 2 years. Realizing that people just gamble their entire savings away so easily. Like it's disheartening, because I don't want to see people get took out with the trash, but it's just the way the economy works. Like there's nothing we can do about it. It's systemic.
Yep.
But
and I brought that point up too. I heard somebody say the other day, and I saw it too. I think it could have been on CNBC too, but somebody was saying, some hedge fund manager, or no, it was gosh, who's the knucklehead on CNBC? Jim Cramer, right?
oh God,
The headline, it was 2 days ago, I think it was. The market down here has just been, it had a pretty crappy week, the last many weeks. But a couple days ago, his headline was, "Buy this, buy that, everything's fine." And you have to look at these things. People who is telling you this? First of all, what do they have to gain? The biggest thing, they're selling something that like the guy I mentioned earlier saying on CNBC this morning, "Oh, don't worry about it. Negative GDP, it's fine," because they're selling a product that they want you to stay in. And I think Jim Cramer said, "Don't look at your portfolios." It's okay. It's okay to not look at your portfolios that often, because they don't want you to see that.
Yeah, no, it's true. I can remember I had my first lesson in the stock market was probably it was in 2017 or something like that. I bought this stock, and this was when I didn't really know what I was doing. And I think the stock at the time when I bought it was like $12, and I was like, this is going to go to the moon. No stop loss on, no stop loss. I just went in there like $1,000, not that much money. And I think all said and done, the stock was worth the money I put in of that $1,000, what was left was like 120. And I was like, and after that, I was like, I'm glad I had this lesson with $1,000 and not my entire life savings, because that's going to be the reality for a lot of people, unfortunately. Like, we've all been there. Like, you have to learn these lessons, and that's why you should, not dive in head first to investing if you have no clue what you're doing, because there's some hard lessons that need to be learned and built into this machine up over our shoulders here, so that we actually act more prudent with our money instead of just gambling it in. Like, after that, I never traded without stop losses. Even in my portfolio, I have stop losses in everything. I have stop losses at points where I'm like, if it goes down there, then it's screwed. There's something completely wrong, and I need to be selling. Like, it's going to go a lot further. So it's you don't have to have your stops really tight by any means, but you just have to have some sort of risk profile on everything. And that's not financial advice, but that's just life advice, really, from what I've learned. But it's some sour lessons. But I feel like a lot of people have just gone, yeah, $100,000 into Netflix, $100,000. One of my buddies in the UK who I spoke to, and I don't tell people that I trade, because when I tell them that I trade, they go, well, especially since 2020, they go, oh yeah, I trade. And I'm like, here we go. I'm like, I feel like saying, yeah, but you trade and you lose money, or you're going to lose money in the future, most likely, because that's just the statistics. Like 70–80% of retail investors, they lose money. Like that, the facts are the facts. And I'm like, yeah, but he was at the time saying like he had money on credit cards that he was putting into these brokerage accounts, and then he was going all in on these stocks, and they were blowing up, and then he'd rotate all the money out and go around. And the last time I spoke to him, he was like, oh yeah, I lost most of that. I'm like, what? And it's just like, because yeah, you're growing it. Like it's like a lot of money. Like you might go 5 to 10, 10 to 20, 20 to 40, 40 to 80. And then because you're just going into one thing, it just takes one thing to break down and you're done. You've lost it all.
Over.
Yeah, game over, exactly. Yeah, it's kind of interesting, really. A lot of this stuff relates to real estate, you know, because it's the same in real estate. Like a lot of people, even if they're over leveraged, they're going to refuse to sell. They're going to be like, no, prices are going to come back, prices are going to come back. And they're just going to sit there saying that. And then they're going to be the ones where the bank says, hey, we're calling in your lines of credit. And they're going to go, well, I can't sell the houses now because the market. And it's like George Gammon says. He says, you never want to be in a position where you're forced to sell. If it's a stock, real estate, whatever, you don't want to be in that position.
Absolutely. And you know, like we mentioned before, I was guilty of this back in 2002 when I first bought, and people can check out my prior videos, when I bought my first condo in San Diego. And then I kept, because I was just hearing the noise. Oh, real estate only goes up, you know, and I'm a young 24-year-old, 23-year-old kid. You see your buddies doing it. You see this. Oh, it can only go up, and you know, made some money, but I got out. Like I mentioned on our last live stream, you start seeing the signs, and yeah, I was chasing the market down in 06. Listing my house. It was just boom, 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 boom. It was like every third, fourth house in my neighborhood for sale sign, and chasing the market down, just relisting it, lower price, relisting it, and people don't get it.
Yeah.
It's gonna happen again.
Yeah, no, it will, because it's all credit. It's not. I like in that movie. I think it's The Wolf of Wall Street, where that guy's like Matthew McConaughey's like, it's all a fugazi, because that's what credit is.
Yep.
Credit is just a fugazi. It doesn't exist. It's not really real. And but people act like it's real. They act like they have all this wealth, but you take away that credit. And it's going to be interesting to see, like, especially in places like Canada, which haven't really had like a credit recession as such. Like credit has been growing here since pretty much the bubble started in 2004, whereas in the US it started in around 1998, just before the dot-com bubble, or 96, I think, actually. But anyway, it was like 7 or 8 years earlier than Canada. But so we're a little behind, and we've never, well, people in Canada anyway, have never seen a credit bubble actually go backwards. And it's a totally different scenario, because it's like the wealth effect, but in reverse. And that's what we're going to see. Like it's already happening with the stock market.
Yeah, big time. And you know, I was watching something last night on my TV. Yeah, it was on YouTube. I forget what it was, but you brought it up right there. Great point. Whether it's stocks or real estate, the biggest thing I see here in Southern California is, especially coastal Southern California, is people think, oh, I'm worth $300,000. Well, where do you get that from? Joe or Jill. Oh, well, my house, I have this much equity in my house. And I learned something way back when in all my business training, sales training. Something is only worth what somebody is willing to pay for. You can say, fine, great, I have 300 grand equity in my house. No, you don't, folks. That's on paper.
Yeah.
You have to physically sell it first, and people they just think it'll go on and on and on until it doesn't.
Yeah, yeah, exactly. Eventually it stops because the payments for the credit get so high, and the servicing of that debt, or something else like a black swan event, which even you could say inflation is that, but it's not, because that was really created by artificial demand from the central banks. But when you really think about it, like, it's the same thing, but it's kind of, yeah, it is, it is really crazy when you think about it, because these cycles, it will happen again. Like, it will happen again, and people are inherently stupid. It will just, they'll forget about it. And I think with this cycle especially, I think this is going to be different, though, in a lot of different ways. And the US particularly is having issues with demographics, like people are retiring and they're dying. And I'm just being frank, but that's the reality. People don't want to have kids because of the high cost of living and the woke nation and everything like that. So people aren't having children, starting families, and you've got a lot of people that are dying. That's not a good recipe, and eventually it's going to meet heads, and you're going to see that play out. Like, when you walk around a neighborhood, Jared, you're probably seeing the same as me. Like, when I walk around this neighborhood, which is pretty like affluent neighborhood here in Calgary, they're all boomers. Like, they're all boomers, and they're all like 60s, 70s. And I'm thinking, like, in 10, 20 years, they're all going to be gone. And all those houses, who's going to buy them? Because millennials haven't got the money. Like, so, so there's going to be a reversion to the mean. Great plug for your channel there. Our names are probably the best, because we got Mania, which it was a total mania, and you're like the part 2. You're the revert to the means. So, but that's what's going to happen. So it can't go on forever unless, and immigration is sort of like it doesn't work, because Canada's been a great example of immigration not working, is because eventually you get to a point where people don't want to come anymore because asset prices get so high, and then you start to see a lot of people leave because asset prices are so high. So you get to this point where you are screwed, and there's no way but things to come down. So, and I think now, even in government, a lot of governments, it's becoming a political issue now. And I, I mean, I don't agree with any sort of political intervention in markets, because it's always a disaster, whatever they do. But it's definitely a risk factor. The political risk is definitely increasing for owning like assets like real estate, because governments are looking to try and be the person that comes out and says, yeah, we managed to keep home prices down or whatever.
Yeah, I'm all about free market capitalism. I think we mentioned that on our last live stream. I heard that from my my grandparents growing up, and my dad and my mom were still the same way. When government gets involved, it gets worse.
Yeah, yeah, no. Yeah, it does. You're right. Well, when you think about it, like, I was having a conversation with somebody the other day, and I was saying, well, why don't they just scrap all the regulations, red tape, everything on building houses. So there's no regulations, no red tape. And he was like, they just fall down, that it would be awful. And I'm like, really? You really think that's going to happen? They're still going to build things to the building codes that they have. Like if things are falling down, people are going to get sued. There's going to be massive liability. But I think it's people think all these red tapes and regulations have some sort of safety factor when you actually take them away and pull the curtain back. The businesses are going to do that anyway because it's supply and demand. Nobody's going to buy houses from a company that builds houses that fall down. Like it's not going to happen. So but yeah, I agree with you. Free market capitalism is the way forward.
And don't even get me started on the red tape here in California with basically anything, small business up to, large business, real estate building. Oh my gosh, it's out of control. It always has been that way. Hopefully sometime it will change, but hey, they like for everybody up in Canada or wherever you're watching in California, it is so difficult to run and operate even a small business with all the red tape involved. People have no idea that all of the different departments of the state of California, you got air quality, water quality, blah blah blah. I could go on for an hour, but all it's money. You have to pay an annual fee for the air quality, for the blah blah blah, for this, for that, for this and that. Oh well, you didn't quite you didn't meet that standard, so here's a fine. Here's $1,000 fine, or whatever it may be. But that's all it is. And then you wonder where all that. I just paid my vehicle registration the other day. I had to get it. I had to get it smog checked. If people know what I'm talking about in California, so it doesn't pollute the air. And I was talking to my dad. I said, "You got to go pay the $55 for me, because I have an older Toyota pickup truck. Every couple of years, you go pay the $55. They hook up something to your tailpipe or your engine just to make sure you're not polluting the air." It literally takes 5 minutes. My truck passes every time, and you wonder where that money goes. It goes to improve roads and this and that. It goes into a big black hole. Everything in California goes into a hole and down the drain.
Yeah, no, it's we talked about on the last live stream, funnily enough, about that. I think they just come out when we did that last live stream with that credit. Is there any more updates on that credit, or do they still not know when it's coming out?
No clue. They have no idea. I had mentioned that in my video a couple days ago, out walking around that housing track, because that was in the news that day. Now they said, the legislature, our governor said, a month ago, 2 months ago, that, we want to send everybody a $400 gas rebate since gasoline is so high. Well, now they can't even, the state legislature and state assembly was meeting this week. They can't even come to an agreement on the increase. They're due for an increase in the it's like a 1 or 3 cent, something like that, increase into the gasoline tax. They couldn't even agree on that, let alone this pause on the tax to send out everybody $400. Makes no sense. Speaking of our governor, I just heard I was driving around today, somebody, our governor here in California, just yesterday, he had a big meeting with the California Association of Realtors, speaking of real estate. And okay. There was supposed to be no media or anything, but this LA talk show station I listened to on the radio, somebody recorded it on their phone, and he was just going on and on about GDP and how great everything is. And that's another big thing here in California is the Association of Realtors. If you're a realtor, you pay annual dues to be a realtor, and they go towards the union dues and the lobbying. They're one of the biggest lobbying groups in California.
Yeah.
So they put a lot of money towards, hey, look here, don't look here. Everything's fine.
Yeah, you're right about that. It's funny you mentioned the Association of Realtors because we have the same thing in different municipalities and across the provinces as well. And the local real estate association, which is for like the metro area that I'm in, they were basically it's just so funny because every time they come out with a report, it's like they point to whichever statistics looks least bad. So like if that's the year over year price, they're going to use that. If it's the month over month price that's looking really hot, they're going to use that. If the sales aren't looking so good, they're going to look at something else. Like they're just trying to divert people. But it was really funny because I put up this video and I said like the prices are down 4% in a month, and I track all the statistics myself because I use their statistics, which I believe to a certain degree, but then, but anyway, but they were down 4% on the month, 5% adjusted for inflation, and I said that in one of the videos, and I had like 5 people comment on that video, and they said the prices are still up year over year. I got an email from the Real Estate Association saying the prices are still up year over year. And I'm like, yeah, they are, but I'm not talking about year over year. You see, you're only hearing what you want to hear. Like it's that bias in people's head. It's scary, you know, because when you're trading and stuff like that, that's one thing you really know your mind will literally deceive you. Like literally, if you are only looking for a certain position in a certain direction, then you will ignore certain parts of the trend and maybe a breakdown. And it's kind of that's the same in life. Like if we look at something all rose tinted glasses on, for sure we're not going to see like that there's a homeless guy there and a crackhead there, but it's just you know, I'm a realist. I can't what can I say? I can't put those rose tinted glasses on. I've tried to do it and it just I failed miserably.
No, you're exactly right, Luke, because I'm the same way. And, I had an interesting conversation. I speak with my parents about once every couple weeks. They live down in Orange County, California, about 2 hours south of me, and had a
Yeah.
great talk with my mom. This was so interesting because she's seen it before. They're in their mid 70s, and she said, "Are you still thinking about moving up to Pine Mountain Club?" And we've talked about it. I've mentioned it on my channel before on my videos. Um, just a little mountain community about 2 hours north of me. And I said, "You know what, Mom? I am because I finally had it. Like in the last 2 weeks, I live kind of like what you mentioned about your neighborhood, and people can see it on some of my videos. I live in a nice neighborhood where I rent a guest house, but there's homeless. I always, nothing against it. I get it. People are in bad situations, but I said, Mom, there's hobos walking down my street now, walking down my neighborhood now, pushing their shopping carts and this and that. I said, I'm sick of it. And she said, I get it too. We're seeing it down here in Orange County. It's very prevalent. And I couldn't imagine what like downtown Los Angeles is, but when a little beach town of Ventura, and people have been commenting too on Nextdoor, the little network social media neighborhood website, it's everywhere. Crime is up, homeless is up, and I just want to get to a small, the whole health crisis kind of kick me along. I just want to get out of where there's a lot of people. Not that it's Los Angeles here, by no means, but I grew up down there, and at 43, I'm done with it. And she said, "Good for you." I think that's a wise move. And I'm like, yeah, I'm done with it.
Yeah. Yeah, no, I think you're right. Like the thing is, crime has gone up a lot, and I see the same thing here, like that you see there as well. Like we see a lot of homelessness here in Calgary. Like crime's gone through the roof, especially downtown. And even when I was downtown, like filming recently, like a lady had literally been stabbed to death by like just a random attack, like a few blocks away from where I was filming. And that was just a couple of days before. And then after that, like a couple of days later, a lady was stabbed. But luckily, this attack, she didn't actually die. They managed to get her help, and she lived to tell the tale. But I mean, they're just random attacks. And even in the park, that I've said this before, it really woke me up when in that park, which I go biking around, and a guy got stabbed like randomly in the back. Like he was obviously just walking, and somebody just randomly came and stabbed him in the back. Like, what? I mean, yeah, like these world-class cities, in quotation mark, are not world-class cities anymore. it, it's weird, because when you go to places like Mexico, and you go to like, especially like where I'm going in June, and I'll show everyone on the channel, but in Quintaru, and going into like the communities there, like I've never felt safer. Like it's like the military stood outside with machine guns and tanks, and you're going into this compound, like you couldn't feel more secure. Yet everyone's like, "Oh yeah, Mexico, it's a dangerous place." And when you actually even get out of those places, like people are really, really nice, I find. And because being somebody who doesn't speak Spanish very well at all, like people are very accommodative of that, even in like small towns in Yucatan and stuff like that. It's kind of insane. So people, I mean, there's a couple of people on the channel who are always like, "Oh yeah, Mexico's just full of drug cartels and whatever." And I'm like, dude, they're in the States, they're in Canada. Wake up! Like this is it's not just one place anymore. It's everywhere. Like, and I think the homeless problem is like the worst in the US and Canada. Out of like, it's not that bad in Europe and in the UK.
No, you brought up a great point. Isn't would you say Quintaru? That's in by Cabo, right?
No, Quintaru is like so it's like Riviera Maya,
Or
Cozumel, and
Cancun, I meant. Yeah.
yes,
Yes.
Cancun. Yeah, that's
Yeah.
what's in the province.
Yeah. I was in Cancun about 4 years ago, and great thing you brought this up, because growing up in Southern California and going to university in San Diego, living there for 10 years, right on the border of Mexico. And that was the whole thing growing up in, when I was a young kid, oh, Mexico's dangerous. And I went there a bunch in college. I'll be Tijuana. You think San Diego, okay, you go to Tijuana when you're 18, 19, you go to Tijuana, you go to Rosarito Beach and Baja Mar. But I never, me and some buddies had a problem one time. A guy, a cop actually took my buddy's watch. We were driving, and he to let us get to San Diego, he said, "Oh, that's a nice watch you got," to my buddy. So we gave him the watch and got over the border. But anyhow, um, in the last year living here, and you and I have talked about Mexico, and you maybe going down there, but I would, I can't believe I'm saying this, but I would rather live in certain parts of Mexico than here. Not that I'm going to, but
Mhm.
that's how things have flip flopped. Like you said, with the homeless and the random crime attacks, and yeah, I think it is. It's a lot of that bias too. When people say, "Oh, Mexico, you don't want to go there. It's really dangerous," and you want to say, Have you seen what's going on where where we live?
Yeah, I know. It is nuts, isn't it? And yeah, it's kind of funny because all along the border, pretty much, is where you'll probably find the most corruption in Mexico and crime and everything like that. Because it's all being, a lot of the drugs are being exported through those corridors. They're where all the crime kind of congregates and locks in.
Yeah,
But
and you can say that, people say that about anything. People would say to you or I or whoever, "Oh, Mexico, it can be dangerous." Yeah, it can be dangerous anywhere. For
oh
that
yeah.
matter.
Yeah, no, I mean, I got a buddy who lives in Houston, and he says like it's pretty dangerous there. Like I hear people say such mixed things about Texas. Like I really don't know what to believe because some people say, "Oh, it's really safe. Then nothing to worry about." And then my buddy's like, "Yeah, like drive-by shootings all the time here," and I'm like, "Really?" But yeah, you don't know what to believe. I guess it's kind of you have to go there, see it with your own eyes. I guess that's the best way to do it, and that's what I'm gonna try and bring the channel with me and show people. And then we're going to Cabo on the Baja in December. So, and I think that would really be a better place because it's just like Quinta Roo and that kind of side. It gets so rainy during the summer, and we're actually going during the rainy season, so it'll be interesting to see what it's like during the low season. But yeah, like Mexico isn't a place I'd necessarily live, but it's a place that owning a property, I think, is like a vacation property. Once the market crashes everywhere else, and the bottom will fall out completely of those markets, because the first place that people are going to start selling is their second vacation homes and rental properties. And most people buy those cash, they don't even finance them. So if they want to raise cash, they're going for those investments. And I'm already starting to see, funnily enough, the repo lots filling up here in Calgary with like RVs and boats, and it's not even summer yet. It's,
Great,
they're
great
just
point. Those are the first to go. The toys that a lot of people bought with home equity lines of credit. They bought their
yeah.
boats, their motorhomes, their RVs, their ski-doos, their jet skis, on and on and on. Those are the first things to go. I'm seeing it here too in Southern California. I'm seeing, matter of fact, video I shot at that housing development had a boat for sale. It was very out of place if anybody saw that, but I didn't mention it. But there was a boat sitting there in this new housing tract attached to a truck with a for sale sign. It was odd, but just
Yeah,
in that new home development. But I'm seeing them. I'm seeing them in my neighborhood. You see them everywhere.
yeah, no. And I think another good thing to watch on that is as well, look at the model years. Like, are you seeing a, because I'm seeing a lot of 2020s. And I'm like, if they bought in 2020 and they're already like being repossessed on that vehicle, then like there's something going on. Like people who bought those cars. And that's the thing with artificial demand and no supply, you get rapidly high prices. And that's basic. It's kind of sad because in a way, recessions, depressions are kind of resetting the supply and demand dynamic. They're what's needed to kind of reset inflation. Whether that takes 10 or 20 years is a different story. But if you think about it, like if people can't afford to buy a certain product, they might just not buy it. Like a lot of people will forego that luxury of buying that product. And then that allows that supply chain to heal itself. And then the product comes down in price again to a place where people can afford it.
Yep.
So, but yeah. Well, anyway, Jared, thank you so much for coming on here. I know your time is valuable, so I don't want to keep you any longer. But Yeah, thank you so much for coming on here. And do you have any other social media or anything that people can reach out to you on, or anything that you want to?
I don't. Just want to say thanks for having me on again. Look forward to doing more of these down the road. The only thing, I have my website, Revert2Means.com. I don't do Twitter or anything like that, just YouTube and the website. So, yeah, thanks
All
for
right.
having me on. Thanks, everybody, for the comments. I've been glancing down at them. So,
Yeah, yeah. Thank you all for being here. And yeah, we'll do this again soon, Jared. Thank you so much.
sounds good. Thanks.
All right. See ya.